Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
A bargain shopper that's always hunting for a deal, maybe that's you, on quality items. You can easily identify with the principles of value investing. That's today's topic on the College Investor Audio Show. Welcome. So a value investor evaluates stocks based on their evaluation of a company's worth. After a careful analysis, a value investor will buy stocks that are currently underpriced by the market. The value investing strategy has been successful for many investors throughout the decades. Could it be the right fit for you? We take a closer look to help you decide. Value investing is a type of investment strategy in which investors act like, bargain hunters looking for a deal. Value investors actively look for companies that are undervalued by the stock market. So when an investor finds a company that's undervalued, you make your move by investing in that company. At that point, the investor is confident that company will provide investment returns that outperform the current market valuation over the long term. What's the intrinsic value of a stock? Value investing may sound like a great strategy. After all, who wouldn't want to buy undervalued companies for substantial investment returns? I mean, come on. But determining whether or not a company is undervalued is an important piece of this puzzle. You can use the company's intrinsic value to understand whether or not the market appropriately values the company. As a value investor, you're not looking at the media when making your valuation decision. Instead, you're drilling down into the books of a particular company. Although the stock market may undervalue or overvalue a particular stock based on the market climate, fundamental analysis of the company's finances can illuminate the intrinsic value of a stock to investors that are willing to dig into the information. Although conducting a fundamental analysis on a particular stock will require some effort, it is a key component of successful value investing. Value investing requires a time commitment. Value investing can feel like bargain hunting in the stock market. If you can determine the true value of a company, then you'll know whether or not the current market price is accurate. Essentially, this presents the opportunity to buy stocks on sale. But finding a good deal will require time and energy, as you can imagine. So here's what you'll need to do in order to set up a chance for successful value investing. Of course, do your research. First and foremost, you'll need to get comfortable researching individual companies. You'll need to look at several factors surrounding the company, including the current finances of the company, the long-term plans of the business, the principles guiding the business, so important, the management team of the company, the financial structure of the company, including whether or not it pays dividends. When conducting your fundamental analysis of a company's value, don't forget to include a margin of safety in your estimated value. You can create a margin of safety that fits within your risk tolerance. Of course, it's going to take some time to learn the ropes and effectively conduct a fundamental analysis of various companies. But over time, you'll become more comfortable with the research. Moving on to diversifying with steady returns. Now, any investment portfolio should not place too much emphasis on any particular company. Instead, you should spread out your investment portfolio among a diverse assortment of assets. With that, you should look for undervalued companies across a wide range of the market. But beyond a diverse portfolio, you should seek out companies with reliable returns. Although there are no guarantees, of course, finding stocks with reasonable and steady returns is ideal. Don't chase outlandish returns with high risks. Instead, find stocks with opportunities for steady returns that could last for years to come. This is playing the long game, remember? Should you try this out? Now that you know a little bit more about value investing, it's time to consider if you should try this or not. It might not be for you, but if you want to try it, then you'll likely want to include this strategy as a dedicated portion of your investment portfolio. Typically, investing solely in individual stocks is not the most effective path to long-term investing success. But take some time to learn more about asset allocation as you determine whether or not to give value investing a try. And here's how to start. If you've decided that value investing should have a place in your investment portfolio? Here's how to get started. Research stocks. The most important part of value investing is setting aside enough time to thoroughly research companies before buying. Since you're hunting for undervalued stocks, you'll need to effectively evaluate a particular company's intrinsic value. When you find an undervalued stock, it's time to make your first investment move. Practice patience. It is a virtue, by the way. Unfortunately, value investing asks you to practice some patience in your investment goals. Although value investing can be successful over the long term, it might take a while to actually find useful stocks. It's going to take some time to learn the ins and outs of the market before finding that first great deal. Don't despair if you don't find the perfect stock immediately. Instead, just keep looking for an undervalued stock that will fit within your portfolio. Ignore the herd. This is hard to do. Typically, stocks are overvalued or undervalued based on mass market movements by stockholders. When most stockholders overreact to the market's climate, it can lead to an unbalanced marketplace with many companies being overvalued or undervalued. To be a successful value investor, you're going to need to ignore the moves of the masses. Although many investors fall into a herd mentality when stock prices rise and fall, a value investor relies on their own fundamental analysis when deciding to buy or sell. If you have a consistent method to determine the intrinsic value of a company, you can decide whether or not you want to buy without consulting the whims of the masses. Here are some final thoughts on this. Value investing can be a useful way to maximize profits for your portfolio, of course. However, it will require a substantial amount of time and effort to execute this strategy effectively. So take some time to decide if this strategy is the right place for you to start investing. Check out thecollegeinvestor.com if you want to find out more about value investing and tons of other resources about money in general. Again, it's thecollegeinvestor.com. Thanks again for stopping by today, and we'll talk to you again real soon.